data is what is driving everything in the markets today. And I have been a trader who's always believed that we have to exploit the power in data. And if you keep ignoring data, if you keep ignoring information, and if you're relying on old outdated information, then you're putting yourself up for a life of struggle in the markets. The markets tend to keep changing all the times. The cricket which was played by the likes of Kapil Dev and Ravi Shastri and Sunil Gavaskar back in the 80s is very, very different from the cricket which is played today. The game has changed. Now, why am I saying that? Because a lot of traders when they come to the markets, they are focused on a lot of trading strategies which were once very useful, but back in about 90s and 2000s and 2010. In the last decade, the kind of change which has happened in the market has been astronomical, big, huge impact. It has propelled NSE to be the #1 derivatives exchange in the world in terms of contracts traded. And it's not just retail traders, it's a lot of institutions from overseas who have come in and who are trading in these markets today, right? So you can ignore all that is happening around you, or you can make life better for yourself. And the way you can make life better for yourself is to arm yourself with information, and not just arm yourself with information, learn how to strategize with that information, learn how to monetize with that information.
Good evening, guys. Good evening, everyone. A quick sound check. Am I audible? So, welcome to this Thursday 5 p.m. session, and let us have a look, as always, as what the auction has done today and what has happened this week. So, we have the Nifty futures profile chart on screen. So, let's just start with the profile and see it. What we have done today is formed a narrow range normal day. We had a big gap down today, and after the gap down we didn't do much. So this was very evident at the open at the VMR, because we were looking at the volumes which were coming in the options, and this is which is why it is very important to know the flow of volumes which is coming into options, especially on the weekly settlements, because that will help us to stay focused and stay in sync with where the option players are marking their levels and what the range for the day could be. So talking about the options levels, we'll come to the order flow chart in the last. Let's now walk to the options table. This options table, as we have always maintained, is a goldmine of information. We can see how much of volumes is coming in every strike price, and which of the strike price has got the highest open interest, highest volumes, and which combination is being played out by the option sellers. So here, this is the end of the day options table, and you can see how today we had the highest volumes in the 23,950 call as well as put. So these in between strikes are not much active on other days, but today the players chose this strike price to uh, pin the Nifty spot. And as I always mention, it was the tail dogging, wagging, tail holding the dog, not the other way around, because it was the option players who held the auction to the narrowest range and even closed right at that midpoint of 23950. So this is anyways the end of the day analysis where we see the highest volumes. The same thing we can follow as the day is started, as the day is progressing, and we can keep a track of this at the end of every TPO. So how do we do that? So let us get into one very useful feature which is this option strike-wise OI base. So today, because it was Nifty settlement, let us just go to this. And what this gives us, by default, this will show us the OI open interest split of all the calls and the put. But what we can do here is we can convert this into a two-window mode. We can have the strike price with the open interest on one side, and on the other side we can for the volume split. So what this tells us is the left side showed us where the open interest is coming in highest, and the right side is showing us where the volumes are coming in. And this again, as in the options table, we can switch it back to from which time we want to see. So I'm just switching it back to the open of today, just to see things as they were at the open and then how the volumes developed. So after the gap down, we were looking at more downside. What we could see was the call open interest building and the put open interest coming down. And that would have given us that confirmation that the option players in the market is looking for more downside. But let us see what how it panned out. As I mentioned, let us look at the scene at 9:30. So at 9:30 you can see how the highest open interest was building up at the 23,900 put. The max open interest was right there, and even in the on the volume side you can see how the 23,900 put was showing us the highest volume. So what was this telling us? This was telling us that the volumes are coming into 23,900 put, and that was being saved on the downside by the writers. So that was a very important clue which we got right at 9:30. So we knew that 23,900 is holding in spot, which is why we had to sync ourselves as per that. And on the upside, anyways, we saw the highest open interest in the 24 call. So that was our base when we started. And when we shift higher to the close of the A period and the start of the B period, we see we look at that there is not much of change which has happened. So the highest open interest in the on the put side remains at 23,900. Even the volumes, highest volumes are coming at 23,900. So this show of volumes, the volumes coming in a particular strike, is telling us that that strike is being saved by the option players. So that this was a very good cue. But for any move to happen, we needed to see some more change in this OI, and volumes needed to come in some other strike. So let us now move on to the C period and see how the volumes were shaping up on that time. So here you can see the highest open interest climbed up in the 24,000 call. So that was telling us that the upside is marked at 24,000 in spot. When this is based on the spot, so on settlement you will look at the spot level, not the future levels, when you're looking at this option volumes. So this 23,900 on the downside and 24,000 on the upside became the range. Even the volumes, you can see the highest volumes were coming right at those two strike prices. So it became very clear at 10:15 itself that the auction is settling up for a very narrow range today. What was the narrow range? Only a 100-point range between 23,900 and 24,000. So as the day progressed, let's now move on to the 11 o'clock time frame. And here you can see now slowly this in between strikes are showing increase in OI, this 23,950. So now once we know that the auction is now settled into a 100-point range, then you look at volume being increasing in the in between strike. So it was very clearly showing us the option sellers are now totally in control. The options sellers are pinning the level down to this 23,950, because with every passing TPO we could see how the open interest and the volumes was increasing at the 23,950 strike price. You can see here the open interest was rising in the call side, and same with the volumes. And as we moved into the hedge later in the afternoon, the hedge TPO, this is at 12:45. This put of 23,950 was almost matching with the put of 23,900. So it was telling us that the 23,950 also is getting saved on the downside. Whereas even the call open interest was building up, so it was very clear that both are being written and it is being written in big quantities. I'll come to the straddle chart and how we can see plot the straddle chart and see the open interest of that particular straddle. But here you can see how this volumes of put and call has been going on increasing, and how the put of 23,950 has surpassed the put open interest of 23,900, which we saw in the morning. So 24,000 call remains the highest open interest, so that remains that intact, but this slowly gained in. And now let us come to the important KTPO, has got the highest open interest, and the call side also is been increasing in volumes, and the volumes here of both call and put are continuing to be the highest. So as we move on to the closing of today, we can get that confirmation that the option players have are in complete control and they have pinned this. Here you can see how when we started the LTPO, this was the 2:45 time. It was very clear that these huge volumes in the put and the call will not let the auction move anywhere else. You can see the open interest also, the 24 call open interest had come down, and now the 23,950 call was increasing. So when we move on to the last 15 minutes, the 315 bar, it's very clearly showing us that how the highest standing was in the 23,950. And if we move on to the spot chart, the profile chart, if I take you to the spot, we can see how everything added up and we closed right at this level of 23950 today. 23951 I think was the adjusted close. So you can see how the options volume right from the open had begun to show us that today will be a range bound day, because we saw option first building up in the 23,900 put, the volumes were highest in that, and then slowly they shifted to the 23,950 put and call. On the upside, 24,900 call continued to have the highest volumes and OI at the open. So it was very clear that the range is marked on the upside at 24,000 and on the downside at 23,900. So this is how we track these option volumes, that they are very important cues. And how can we open the straddle chart from the options table? We can go to the straddle. For example, we are looking at the 23,950 straddle today. We have an icon of opening the market profile chart as well as the line chart. So let us just open the market profile chart of that straddle and see where we opened. In spite of the gap down, this combination of 23,950 call and put opened well below previous day's value. So if you are looking to go short in this straddle, our stop loss would have been this POC of 274 and this VWAP would have been the higher reference. But what we did instead, we continued to probe lower all day. We did make a pullback in the E period, but that stalled right at this extension handle of A. And then we continued to probe, go down. From this uh, market profile chart, we can also tune up the line chart. We can use the dual window mode. We have the market profile on the left. We can have a line chart of the same straddle. What does the line chart tell us? Let us just have a look at the line chart and it'll show us what it is. So this is the line chart of that straddle, and if I take you to the open of today. You can see how once we broke below this VWAP and POC, we remain below VWAP in this straddle, and how this green OI is showing us the OI increasing. The option uh, writers coming into this with full fledged. So here you can see this did come to VWAP in that E period, the pullback which we saw, but immediately at VWAP it got rejected. So this red OI could be because some of the writers had to exit because of this swipe at VWAP, but then again gradually they started to come back in, and this remained below VWAP and the POC kept shifting lower. So this is what happened into the close. The open interest climbed up to a big, I think around 28 lakh was the highest open interest in this 23,950 straddle, which is rare to see in a in-between strike. But today, because the option sellers had uh, selected this as their strike, all the volumes came into this. So if you were an option writer, this was a very good case of selling this call and put, seeing the volumes in the options right from open and taking this down to at least 10 and 20, if not to 0. You definitely want to book out when the straddle is come down to around the 10 level mark, and not risk the last 10 points where some adverse move could give a spike. So nothing of that sort happened today, but we need to be prepared for the worst, and that is the reason it is best to book profits and trail our positions to cost and make it safe as much we can. Because once if you have taken a short position around 100 in the straddle at the close of the A period, you are still making 90 points. So there is no point in holding it for the last 10 points where you can get the 90 points and come out of the trade. So this is how you can use this market profile as well as the line chart of the straddle. One more way of doing this is, because you know which of the options are getting the highest volumes, we can have the order flow chart of both the options, the call on one side and the put on one side, and see how they are shaping up. We can also have the line chart. The line charts are also very visually appealing, and they tell us what is happening. As you can see in this line chart, this is the call. I'll go to the put on the right and the call on the left, and this will also show you how right from the open the writers were completely into this. Yes, there was one swipe here when we this call went above VWAP, resulting in this red OI DOI bar, but otherwise it was mostly green. And same with the put side. So you can see how you can, it is up to you how you want to select. You can use the line charts or the candlestick chart which we have. This is showing you the open interest which is rising. And once this option is below VWAP, it is definitely a candidate for writers. So till the time it remains below VWAP, the writers will keep adding on. And as you can see, this open interest just kept rising in both. In the call, there was one swipe at that 11:30 mark, but after that, it again began to rise and it remained below the VWAP. So this is one way of looking at, and you can, this next way is going to the order flow chart of the options. And because this is being written, you can have the 30-minute order flow chart open. So I'm having the 30-minute order flow chart of the put on the right and the 30-minute order flow chart of the call on the left. So here you can see the 10 bar cot is showing you minus 97, clearly telling us how much of open interest has been used for selling this option. Even in the call side, the last 10 bar is showing us minus 5 lakhs. So this 30-minute order flow chart keeps us in sync with what the references are as we move forward in the day, starting from the A period. So you can see the A period POC of the call was at 78 and the A period POC of the put was at 96 with the VWAP being at 86. So if you are looking at option sellers holding fort in these strikes, the option will have to remain below these two references and continue to make lower lows. So you can see how this E period swipe which happened in the call stalled right at that POC of A period. So after which again it continued to probe lower, and on the bottom table you can see how the OI is increasing and the cot is red. After especially the first two bars where the cot was green and the OI was green, you can see big red cot in the call side. So this is clearly telling us that the writers are getting into this full time and big time. So into the close you had only red cot in the call, and similar thing in the put. You can see how the cot was red right from the B period and the open interest was rising, and how it remained red throughout the day, and both of these options went on to close around the one uh, level mark. So this is how you can keep a track of the order flow of the particular straddle. If you are into a strangle, you can open the strangle order flow chart and see what the references on the 30 minutes are. And if the writers continue to dominate, you will get that confirmation in this. The cot will be red and the DOI will be green. So that is telling you that the writers are continuing to build in positions in this particular strike. So this is how we made use of the option volumes and selected what the strike was where it is likely that the Nifty spot would close today. So coming to the Nifty futures order flow chart as such, let's have a look at what the order flow showed us today, and then we'll move on to what the order flow was from the start of this week. So wherein we can very clearly see how it was different today than previous days, and how whatever selling we had seen and whatever short setup was there was not no longer showing the confirmation in the order flow today. So this is a 30-minute volume order flow chart of Nifty futures. So you can see as early as the A period, we did see some reds at the open, but the A period formed an RB bar, responsive buying pattern. Although the cot was slightly on the red side, it was we could see it in the 3 minute that the greens were adding up rather than the reds. And the reason that it closed above the VWAP after an big gap down was telling us that the sellers were no longer there. The supply was not present at the morning today after the gap down. So which is why you can see once we got above VWAP, we remained above VWAP all day. At no point in time we sustained below the VWAP today. And even the cot, you can see how the cot turned green from the B, and it remained green throughout the day, except for this small red cot in the FTPO. So here you can see how clearly the order flow was telling us that there is the supply is not there today. The demand was there is more of passive demand than supply today. Hence the market stopped falling after the gap down. So if I take you back to the beginning of the week and the last 2 days especially, we can so clearly see how different the order flow was at the open of the previous sessions, which is what gave us that setup. And in fact, it was a short carry trade right through this week, because right from the first day of the week, which was 16th, we had seen some good selling coming in into the auction. So this is the Monday's order flow chart, 30-minute. You can see we opened lower, and you can see how at the open we got this minus 748 red and 1196 red. So we immediately got big red caught, and you can see it was mainly on the red side. The sellers had come at the open. So initial balance is where we give lot of importance in market profile, because we understand that the bigger players have already made a plan and they make their entry in the first hour, more so at the open, and then they hold the auction. So that is what happened. All of these 3 days, except for today, we saw big selling coming in the IB. So if you see Tuesdays You can see this is the first 30-minute bar of Tuesday, and you can see how many dark reds you can see here. So there was so much of supply imbalance right in the opening bar, and you see the cot was minus 9396. So this was clearly telling us that the auction is being uh, inundated with supply. And not only that, not only was the cot red, we also got this 30-minute is, and the 30-minute is a very important signal. And what we do is we go short below this is bar with the stop loss above this is bar, and we look for targets as per this range. So below 24451, it was a short. We already had seen sellers adding up right from Monday. There was good selling, which was there even in the initial balance on Tuesday. And we got this 30-minute IS below which we sustained on this day. In fact, we closed below this on Tuesday, and yesterday's open, we did get a move back, but you can see again the move back was on red cot. And where we stalled, this was right at the low of that IS 30 bar. So it was very clear that even though there was some shots who were booking out, there was some pullback, but again this pullback was used by the sellers to come back in. And you can see how after this 24460 high, the cot again started to turn red yesterday. So the supply was again gaining in control, and into the close we saw more of red cot rather than green. So which was telling us that the sellers who have been accumulating right from Monday have all been holding their positions. Their booking, profit booking was there, but not to that much of an extent as per what the supply was. So which is why the market was already biased to the downside, and it was not a surprise that we gapped lower from this 24,260. We opened with a start of 23,970. I think today we had a free ticket 24,900, but the open was around 23,970. So it was no surprise that these supply sellers had already stacked up, and they used this open, the gap down open, to book profits. So it was very clearly showing us that this today's P-shape profile is more of shorts booking out, and we will need some follow up by an IB. We did not get any IB on 30 minutes, so we'll need to get that to give us that confirmation that okay, now we have got a short term bottom in place, and now we can look for some more upside in the coming sessions. So one important thing what we have done is this 23977, where we have taken support today, is the series VWAP of November. We have discussed these levels in our monthly report and the other weekly sessions which we have on Monday. So this is not a random number. This was already discussed. This was already marked out when we started the series of December. So this 23977 remains one reference for the rest of this December series. In case we get some supply coming in at this level, then we can expect more downside in the coming sessions into the expiry, the monthly expiry. On the upside, we will have to first look at how this gap plays out, and then we will have to look at, in case we continue to probe higher, we'll have to look at this VWAP of 24305 of previous day, and then this IS bar low of 24450. So this is how we are placed in Nifty futures for now, and we will need to see how it goes move forward. So and same thing, because the weekly settlement is done today and we will have the monthly expiry, and the volumes will come in the monthly options from tomorrow. We will have to have a check on what the volumes, how the volumes in the options are shaping up from open tomorrow. If we are seeing any particular strike price getting huge volumes, then will be able to analyze and we'll be able to mark that the option players are building their base at one particular level and then looking to take it away. So for example, this 19 December tab will not no longer be there from tomorrow morning. So we'll only have this. So as of now, let us see what the volume, where the open interest is the highest. We had the highest volumes in the 24,000 call and put. So for the monthly expiry, this remains the gamma 0 level, and we will need to see how the option volumes build up tomorrow. This is a part of what volume we saw today in the weekly settlement. This is only showing us 10 lakhs 86,000, whereas what we had in weekly settlement of today was more than 50 lakhs, I think, per strike. So you can see here, no, in fact, crores, 4 crores 87 lakhs. So you can see the difference in volumes in the weekly and the monthly. So that is the reason we look at trading the weekly options, because that is where the highest liquidity comes and we get to get some good tradable setups. So we will have to keep an eye on these monthly expiry options from tomorrow, and we'll need to see which of these strike price is attracting the highest volumes, which we can do by this two window mode of options, and we can select this 26th December expiry, and this is reconfirming what we just saw in the option table, that 24,000 call and put has got the highest open interest, and today's volumes were also highest at that particular strike. But comparatively, the volumes were just a fraction of what we saw in the settlement today. So we will need to see if the volumes are higher from tomorrow and which of the strike price is getting. In case there is an imbalance coming in, then only one of the put or the call will get attract higher volumes, and the other end would be free to move. So they'll be built up only on the call side if we are getting a move lower, and vice versa. So that is how these option volumes help us, and you can keep a track of this right from the open, and we can also see at every time period how the option open interest is developing. So it's a normal day today. So tomorrow being a Friday, we can expect a bigger move. The gap down had the biggest range today. After the gap down, we have made a very narrow range in both Nifty and Bank Nifty, but we are at a very important junction. So tomorrow could be a day where it could give us that confirmation whether it is continuing to go lower or whether it is going to give us a retracement. So that is it for today, guys. And in case there are any queries, I will be happy to answer them before we wind up. Rohit has a question asking LLT between 1135 to 1140. Yes, we will get these LLTs. And what we do is it is this LLT which I think Rohit is talking about. It was a big 3354 green. So that is the reason in order flow we do not take individual readings. We look at it as a whole. So definitely this was a big player. It was a big green, but the order flow signal which we got on 30 minutes was that of an RS. So RS is only showing us that it is a responsive player. It is old business. So it could either be a short who is booking out, or it could be a rollover which is happening. But whatever the case is, what we need to do is we need to see if the big green LLT is giving us a IB bar. Only then we get a good buy side trade which is working up. Otherwise, it is not. We will have to wait out. We'll have to wait for the order flow features to fall in place to match, and then we will have to look at that, taking that setup, because that will have much more probability in giving us a winning trade. Ram Kumar has a question asking, have all these shots booked out? That is difficult to tell, but yes, today was more short covering and the cot was green. If you see the 10 bar cot, it is showing us a healthy 14,900 plus, which is for the first time in this week. In fact, from last Friday, the cot had been the 10 bar cot of both 3 minutes and 30 minutes was continuously red. So it was definitely telling us that the sellers were harping in. But this cot has told us that shots have booked, but we will need to get that more confirmation tomorrow at the opening volumes and the order flow signal to know if this booking is will be followed by initiative buying. The 10 bar cot is green. It is 14,913 green on the 30 minutes. So that is the reason this caught was red yesterday, and that is the reason we could expect that the market could continue the trend which it had started. But now it is turning green. But these initiative buyers are looking more of old business because they have come as responsive signals. So it is telling us that we need to wait for an IB to form for us to expect more upside in the coming days. We have rules to identify responsive and initiative. So if you have access to the e-course that has been explained in that video, I would suggest you go through those videos. It is very clear. The rules are very clear of how to identify responsive and initiative or activity. We don't trade we don't go long just on green cot. We need an IB to go long. We have not got an IB as of now, so that is the reason we are not long. We'll go long if we get a IB on 30 minutes tomorrow. And as I have already mentioned, the IB high would be your entry point. We will need to get above that with the stop loss at the IB low. According to that range, you will be able to get to the targets, just like how we got this 30-minute IS. So the target for this 30-minute IS was this range of the bar. If you subtract this, so we had a range of 130 points. So if you take off 130 points from this 24451, you get a target of 24315, and then the second target would be 130 lower. So that is it for today, guys. Thanks for joining in and hope these sessions are helpful. Do write to us for your feedback and please stay tuned. We have got a lot of new things coming up in 2025. It promises to be a very great year for us, and these order flow signals are just getting cleaner with whatever cleanup has happened in the options wise, and the weekly settlement only retaining of Nifty futures. So it will definitely be very good. So stay tuned to this, and you will be updated on whatever features are being added. 2025 is promising to be a lot of good things, along with whatever features are there. That those are also going to be getting more advanced, and you'll be getting the latest edge of seat parameters, which will eventually be helpful to get more trades in your direction. So thank you guys for joining in and signing off for now. Have a great evening and let's have a good Friday tomorrow.